Welcome back to Morning Trade Live. It's time to focus on the energy space. Brian Kessens is with us, Senior Portfolio Manager at Tortoise Capital. Thank you for being with us. So we've seen volatility when it came to crude. We were below $60 on oil, now a little higher. It wasn't that long ago, we were closer to 70. Some of your thoughts on the big picture.
Yeah, thanks, Nicole. It's great to be with you this morning. I think certainly energy has not been spared. The volatility that we've seen over the past week or so since the tariff announcement, it was exacerbated a bit as it relates to the crude oil price. To your point, last Thursday when OPEC actually decided, led by Saudi Arabia, to accelerate bringing some production back online, I think what was lost a bit in that decision from OPEC was the real aim is to bring some OPEC countries that have been overproducing for the past couple of years back in line, like Kazakhstan, Iraq, and to some extent Russia. So time will tell, but really net, we would not necessarily expect much of an increase from what OPEC's policy was before, if they're able to bring those countries back in line. Looking at the longer term for those OPEC countries, $60 oil is not overly helpful to their budget deficits. They need $80, $90, and over the longer term, we generally think that's where crude oil is likely to lead to.
I do want to get to how the tariffs affect energy overall. I mean, you did have OPEC also come on board with some comments as well about more production, right?
Yeah, they're aiming to bring more production to the world. I think to the extent that there is some uncertainty as it relates to tariffs, they do want to give the sense that oil will continue to flow throughout the world. There is no economy really without energy, and energy is led by and large by oil. So they don't want to give the sense that there would be any necessarily disruption as it relates to trade and the overall oil market. So that's a good thing, at least to give consumers some stability that oil will be there.
So the tariffs on the energy sector, there's different parts of energy. Of course, there's infrastructure, there's oil and gas. I mean, as an expert in this area, what do we need to follow here when it comes to tariffs?
Yeah, for sure. Tariffs certainly going to be disruptive to the world economy. As it relates specifically to energy, though, and to the U.S., it was noted that President Trump's very pro-U.S. energy. And I think also what was lost a bit is that the idea is we ultimately want to reduce our trade deficit. The thing that the U.S. has a comparative advantage is our energy, in that we can produce a lot of energy for relatively low cost relative to the rest of the world. And to the extent that other countries can enter into longer term contracts, especially for LPG and natural gas liquids like ethane and propane, they can import our relatively cheap energy over the long term to help improve our overall trade deficit. And in fact, we are expecting some longer term contracts to be signed, especially for our LNG, just as a result of the tariffs as part of the negotiations that we expect going forward.
I thought it was interesting how you said global economic growth will continue to drive demand, long term. I think a lot of folks are worried about demand.
Yeah, we do expect some disruption over the short term here as it relates to the global economy. Maybe we will see a mild recession. We do expect we're going to come out of that at year end. Yet if we look at where energy demand has been the longer term over the past even 40 years, and 40 of the last 42 years, energy demand has grown. And that's through several recessions. It's through 9/11, it's through the 2008 financial crisis, through COVID. Generally, energy demand just continues to move higher. It's very resilient. And even if we do see some bit of a softer economy here over the short term, we expect energy demand to grow. And we shouldn't lose sight of the fact that artificial intelligence is going to continue to grow. We can debate on the magnitude of that, but that requires a lot of additional power to meet all of those data center needs, and that's going to be powered by something. And we think that a large part of that is going to be natural gas.
And then there's dividends, buybacks. I mean, would you be buying some of the stocks in this group?
We are. Yeah, if there's a difference in the U.S. sector, U.S. energy sector now versus call it 10 years ago, Leverage is a lot lower in the sector. A lot of producers don't have any leverage whatsoever across energy infrastructure or pipeline companies. Leverage is a full turn of EBITDA lower. And companies have free cash flow. They didn't have that a decade ago. And that free cash flow can certainly go toward CapEx, which we expect to continue. But there's unallocated capital that can continue to go toward dividends and share buybacks. Nearly every company across the U.S. energy sector has a share buyback program that they are aiming to use in an opportunistic way. And whether it was the regional banking crisis from a couple years ago, or other pullbacks, or certainly over the past couple of days, we expect that energy companies have been in the market actively buying the shares with the weakness that we saw recently.
And the premise under the Trump administration is more energy production here at home, I guess, you tell me. And in the end, do we see oil prices staying close and around the $60 range rather than 70? Where do you see price?
We see prices continuing to move higher, if for no other reason than the OPEC countries need a higher price to meet their budget deficits. So I think they're going to aim to manage the amount of supply that ultimately reaches the market over the longer term toward a higher price level. U.S. energy companies really don't have a lot to, or any individual company can't really necessarily drive the price, but we do see it moving higher. That plus we're likely to see some inflation, which can be helpful for energy prices as well. And then at $60, we do expect some countries, notably some of those OPEC countries that have been overproducing, to curtail some of their production. So generally, we think prices will move higher over the longer term from here. And it won't necessarily be a straight line, but that's the trend that we see.
All right, Brian Kessens, Tortoise Capital. Brian, thanks so much. A good chat here about energy and what to watch for. Appreciate it. Thanks.
My pleasure.